It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Brisbane's real estate. Now, back in the mid-1980s, Brisbane was still considered cheap compared to Sydney and Melbourne. The median Brisbane house price back in 1985 was roughly $68,000 to $75,000, while many apartments could still be bought for under $50,000 in inner city areas. Oh, to go back to 1985 and snap up some of those properties, eh?
Oh, to go back there, I have to tell you, I had a bit of a giggle when you mentioned the year. I was in year 5 then, but I do remember my parents paying somewhere in the vicinity of 17 or 18% in interest rates at the time.
Yeah, that's right. I'm one of those people that was paying exactly that sort of money with the interest rates in the 80s. Yes, it may have gone up somewhat at the moment where the interest rates lay, but anybody back then can certainly identify. Now, you've got an interesting story here because you have come from a psychology degree. First question, what made you want to trade that for real estate?
It's funny, isn't it? Because real estate was really not on my radar when I was going through high school. But I now remember that I did, you used to do work experience when you're in high school and you're 10 or 11 or whatever the case may be. I actually did it in a real estate agency, and I'd actually completely forgotten that until this very moment. I went down the psychology path and I was very interested in human behaviour, and particularly groups of humans and how, from a sociological perspective, how they behave. And I think that's when I discovered property, and I'd always had an interest in it because my dad was very interested in property. But when he and I and my mum had a chat and said, look, I'd really like to get into this property thing, it really took me down a very different path. I've been doing a bit of corporate consulting and with a HR degree and an MBA, but the property side of it I found was really interesting because it's not just about the product, which is the bricks and mortar. It's about the behaviour of the buyers and the sellers and all the other parties that are involved, and how those things can come together in a positive way in a lot of circumstances during a negotiation.
Yeah, human behaviour and dads. I have spoken to hundreds, thousands of people since we have been operating the podcast, and the amount of women that have told me that their dads were very influential on getting into real estate. Some of them, they had dads that were running real estate companies who were principals and then, of course, naturally take over the business. Question for you, though. Do you think the emotional side probably matters today just as much as interest rates and borrowing power because people are scared of making the wrong move in this market?
Yeah, and I think emotion has always come into it because we do consult our parents and we do consult our colleagues, lots of water cooler chat. That was very prevalent when I started in my working life in the mid-90s. But now there's so much influence coming from all sorts of different people, and every move you make is very public, and that comes through the social media interactions that you have. So I think there's an even greater fear of judgment, of making a mistake or doing something that somebody else might judge us negatively for, because it is so public and so many people know what you're doing all of the time. There's very little that people don't know about their friends these days. And I think that really opens them up to that feeling of vulnerability and that feeling of, oh, what if I get this wrong? And that's hard. It's a very difficult place to be in when you perhaps haven't got someone to guide you through the process.
Yeah, Brisbane has for a length of time now been talked about as this long-term growth story. I want to ask you, what are you seeing right now that gives you confidence or caution about the next stage of the Brisbane property market?
It's a really interesting time. I've been a buyer's agent for 22 years, and that's working exclusively as a buyer's agent. I sold property for a little while before that, about 15 months before I went into that. But I bought my first property myself in 1998. And as a first-time buyer, I made every mistake when I bought my first house, but I was really quite committed to getting into the market. It's changed so much since that time, but I've seen about 7 market cycles since I've been working in the industry. What I see in Brisbane is there's some really key indicators that tell us when a market is either slowing or speeding up. And those are things like, the number of people at open houses, the speed of offers, how quickly offers are being made, the sense of urgency people have and that fear of missing out. And those things are just starting to, the heat's coming out of them a little bit. Now, I'm not saying that the market's slowing. I'm saying the sense of urgency in Brisbane in some areas is just starting to settle a little bit. And what we might see as a result of that might be some slowing of growth, because growth has been quite remarkable since 2020.
Has last week's budget made a difference in mindset? There is a lot going on, isn't there, for younger first home buyers, and this year it is crazy out there.
Hello, Craig. Yes, it really is crazy out there. And that really is a problem, not just for younger home buyers. It's hard sometimes to separate out the wheat from the chaff. What's the important news and what's the less important news? What is impacting me and what is going out in the big bad world that is probably no different than has been for a long time. So there's a lot of confusion. And let me tell you, there's a lot of anxiety.
Yeah, I want to swing into baby boomers because the millennials or the younger investors these days, quite a different mindset to the baby boomers. I think stress back then wasn't elevated to the levels that younger people have got to put up with, deal with, and sort of negotiate on a day-by-day basis. Is that fair to say about the baby boomers maybe slightly different with the way that they manage problems?
I think the world of the baby boomers was a wonderful world. It was after the war, after the Great Depression. Home ownership was something that could be expected, but we also didn't have the aspirations that the young people do today. There was an expectation of baby boomers that they would leave school, they would either study or go straight into the working world, and they would work. They would save for their first home, and they would make a home and a family. I know it's generalizing, and I know we have to be aware of that, but when we look at the generalization I can make of the millennials today, there's a sense of the big wide world is out there and I want to see it. I don't want to be responsible yet. I'm not ready to settle down. Why should I have to struggle for this? Why can't I just have what my parents had? So there is less a sense of this is my task, this is what I have to do, and more of a sense of I'll take my time, but it should come to me when I'm ready.
You raise a really good point, and that is, why can't I have the sort of property that my parents had? Tell you why, the world has done a 360. It is a completely different environment, and the baby boomers didn't, of course, have social media. In your sphere of talking to people, especially around anxiety and the pressure in the housing market, how much does that come into play with social media? I mean, hey, the 1990s, what a wonderful era. It is the best 10 years probably of my life, but then I love the 80s as well. Yeah, social media, it's a problem.
It's a real problem. It's, as I say, it's a problem in that everything comes up as a big issue. There is no determinant that says, now pay attention to this because this is going to impact your world more than the other influencer and what they're saying. Young people today, I think, are so overwhelmed by information that's coming in, have not necessarily got the skills because no one's been able to teach them because it's a new world about what is important, what's not important. Everything seems to add to anxiety, to a sense of unfairness. We can compare ourselves with everyone now, whereas before we used to compare ourselves with our little social group. We didn't look beyond that and say, oh, they've got that over there, I should be entitled to it. I think there is a different sense of entitlement, and there's also a view that I should have everything. There's also a view that I can defer working hard for something and it should be able to come to me later. That wasn't the baby boomer way of thinking. The baby boomer way of thinking was, this is our world and we work for it and then we will have it. There was confidence that we would get it. Now, I don't know why I should have to work for it, and anyway, don't know whether I'll get it anyway. So there's a lot of generalized anxiety in the world right now.
Is it fair, do you think, some of the criticism that the baby boomers have actually received, particularly from the Gen Zs, the millennials, etc., saying, well, you know, they had it easy? Is it more that they had a different sort of a mindset, which I think is what you're leaning into anyway?
I'm leaning into that. I'm not suggesting it's easy for millennials. It is very hard to get into the housing market. You know, the entry point seems to be much higher. But most baby boomers who own their home have worked from the time they finished school and sometimes while they were at school until retirement age. It's not as if they took 6 months off here to travel the world or 3 months off there just to take some time because I don't know what I want to do. I think the young people had that terrible interlude of COVID, which interfered significantly with their sense of how do I want to live my life? Do I really want to live it just sitting in one home, working for that one place? Or do I want to see the world while I can? So I don't think that the millennials have necessarily had it easy, but I do think they have a different mindset. And I do think that impacts their sense of entitlement and their view of how hard should I have to work for this?
Don't navigate the real estate market alone. Let us help guide you in the world of real estate every day. Make better informed decisions with the latest news and insights.
Are we, do you think, at the moment, from a mortgage lending capacity, entering a completely different cycle for Australian real estate? What do you think?
Yeah, absolutely. And because of the negative gearing changes post the budget, we're seeing huge wholesale changes to borrowing powers, which is still very much to be confirmed. However, the figures can be as much as 30% in some cases, as in investor borrowing. If they're going to the bank for a borrowing power, it can drop off by hundreds of thousands of dollars in some cases.
Now, is it some or many investors who are reassessing these long-term strategies following the proposed changes to negative gearing and capital gains tax? Like I mentioned, commercial property. Some people are getting into that, while others are shifting focus towards cash flow and yield rather than pure capital growth. I think there's a lot of talking inside that particular sentence. So how significantly do you think that investor behaviour could change, especially in the next year, the next 12 months?
Massively. Again, because anything existing, the negative gearing borrowing power has been smashed. It's pretty much been demolished. So any investors that are going to the bank, they'll be able to borrow a lot less. So we'll naturally see a shift in borrowing power between people who are chasing existing properties versus new properties. I've spoken to investors in the last 6-7 days since the budget. I've spoken to buyer's agent, and in order to preserve borrowing power, we are seeing a shift from the established properties in towards the new properties because the negative gearing can still be applied to the new build. So that is one of the switches. As you said, the yield is a big play as well, because from 1st July 2027, we may not be able to negatively gear the properties. Actually losing money on a property from a cash flow perspective is going to become less and less attractive. We'll see value adds, we'll see dual occupancies, we'll see the additions of granny flats, and as you mentioned, commercial property will probably spike as well.
Yeah, we talk about how it's become a genuine two-speed housing market right across Australia. Sydney and Melbourne are beginning to soften, while markets like Brisbane, Perth and Adelaide are still ploughing ahead despite those higher rates. Do you think that the stronger growth market can continue outperforming, or will affordability pressures eventually slow all of these capital cities altogether that, as I say, they're moving forward and despite some of these rises?
Well, we've seen already in 2026, the knock-on effect of the 3 interest rate rises, even pre-budget, has meant a lot of capital cities have decreased in value. So the next 12 months, it might not even be a case of who's going to increase the most. It could even be who's going to decrease the least. It could be a defensive play as to which states are not overly leveraged. They have ability to borrow at a higher amount, and those affordability pressures are going to hit the higher end of the market for sure.
Next week, we are going to continue our conversation next Thursday with Brad from Tiny Deluxe Homes. He's giving us the lowdown on the spaces that he's building. Brad has got a company that is very compliant, but this granny flat stuff on the back of people's properties, of what you're talking about, have you noticed that there's been somewhat of an explosion, or is it more like, there's more interest in this area?
Yeah, definitely there has been. Since the prices in Brisbane have gone up and people are starting to feel the pinch with their mortgages, they're all looking for that extra little bit of a cash grab to help them hold their asset. So it's definitely out there, and there's a lot of interstate buyers agents that are promoting it as well as the way to turn your investment property into a cash flow positive property.
If you've got one of these granny flats that Leanne is talking about and it's not compliant, do yourself a favour, make sure that you are installing multiple fire smoke alarms. That is the minimum that you can do, because it's one thing to have something that is not compliant and is not going to cover you in the insurance factor, which you've explained. Something burns down and, God forbid, it catches the main house on fire and then you are left with nothing. So, yeah, put the smoke detectors in, eh? How many people do we know that don't have those?
Yeah, it's incredible how many people will take that risk. It's certainly not a risk I would like to take.
When these price guides are vague or non-existent, what do you think reliable data points should a buyer use to just sort of help clarify and help figure out what a property is realistically worth?
I see people making the mistake of looking on realestate.com and having a look at what's on the market at the moment and trying to compare prices. But the easiest way is to actually have a look at what's actually sold. So press the sold tag on realestate.com and that'll actually show you not what they were hoping to sell for, but what they actually sold for. Then you can find yourself some comparables in there. But just a word of warning, that's usually 2 or 3 weeks behind before it's recorded. So you want to be in the market and actually seeing day to day what's actually happening in your area. But a quick check on the real estate sales portal will certainly help you, give you some sort of guidance into what the price is.
Yeah, because underquoting, we know that this is a major problem. We've spoken about one individual losing his license for 10 years. You're seeing that in your market?
Yes, definitely. It's one of those fine line things that sales agents use in their tactical box to drag in more clients. If they put the price up, people might get scared away. They tend to drop that price down a little bit, drag people in. Hopefully they'll get emotional and then they'll, find the money and raise to where it actually should be. And there's laws around how low you can go.
Yeah, so just watch for that, because that is a tactic, unfortunately, still being used. Now, walking into an auction blind, how many of you are doing this or overshooting your budget? It's a massive fear for everyday buyers. Leanne, you have to be so prepared here to navigate aggressive auction environments without overcommitting financially or letting the emotion dictate the bidding limits. How much of this under preparation when it comes to auctions are you observing this year?
There's a lot of that at this point in time. A lot of people have been missing out here in Brisbane, and you'll see a wife and a husband team and they'll start getting emotional and trying to find that extra cash to make sure they don't miss out again. And sometimes, you've got to be able to have that walk away figure where you unemotionally say, well, that's it, I walk away. Otherwise, you can really get yourself in some hot water.
We connect you to the best real estate information across Australia. The Real Estate Podcast.